At the Hampshire Hikers Footwear Company, the core philosophy is to provide high-quality footwear at a reasonable price. This is a best cost provider strategy. This strategy provides customers with footwear of the highest attributes and quality at a reasonable cost, allowing the customer to get the best value for their money. To achieve the core philosophy, the company needs to be profitable and the company's stakeholders need to be satisfied. Measurements like earnings per share, return on equity, and net profit need to be sustained year to year. Hikers are one of only two companies with an EPS above $14, an ROE above 30%, and net profit over $300 million. In addition to being ranked among the top two companies in financials, the company leads the industry in 2 of the 4 scoring measurements determined by the Footwear Industry Report, with an A+ credit rating and a 92 image rating. The company's commitment to corporate social responsibility and citizenship have contributed to them being ranked number 1 in image rating since the industry began. Starting in year 11, adjustments were made to achieve the best cost strategy initiated by the company. Investments in production equipment were made to improve the quality of the footwear being produced, and the footwear artisans received quality crafting training. The net profit levels were modest during the first few years as the company focused on producing quality footwear. In year 13, the company was met with the stark reality of a global market, the foreign exchange rate. There was a significant fall in the value of the Latin American real as it continued to weaken against the US dollar. Due to the negative effects of the exchange rate, the more shoes the company sold in the region, the more money they lost. After a tough year, the company took time to evaluate other factors that might affect them as they moved forward. The company determined that with the fierce competition in the industry, they would need to build brand loyalty to keep their current customers, and they would need to produce a superior product to sway the customers from their rivals. The company developed a new marketing campaign and with the growth in customer awareness of the product, determined it was time for a slight price increase. Having a high image rating was something the marketing people knew they should use to their advantage, stating that the slight increase in price should not scare off any customers, especially since they are getting a superior product. The company implemented the changes, and when year 14 closed, the numbers were positive. The internet and wholesale revenues were up significantly. The EPS was up 97%, the ROE was up 44%, and the stock price had jumped 149%. The plan for recovery was working, and the company was back toward the top of the global rankings, landing at the number 2 spot. In years 15 and 16, the company remained focused on making superior quality footwear, marketing, effective pricing, and increasing production facilities. The year 15 numbers were great, the EPS was up 45%, and the stock price was up 65%. The numbers were up again in year 16, and Hikers moved more pairs of footwear than any other company in the industry. In year 16, the company's combined market share for the internet and wholesale segments were leading the industry. Net profits for the company have surpassed $300 million, and the EPS and stock price were up over 25% from the previous year. Hikers are leading the footwear industry in every region, providing the highest quality footwear available anywhere at a consumer-friendly price.